Bitcoin is breaking out. But have you noticed the silence? While meme coins are on fire, the entire crypto world seems unusually quiet, which is odd. Well, it's the trap of recency bias. So many traders are falling to right now. They're expecting alts to take the lead just like last time, just like the previous time, but they're missing the bigger picture. What's up, everybody? Chris over here, founder of Pollinate Trading. We use real statistical edges to build trading systems and adapt them to different market regimes. Today, we're diving into why this crypto breakout is different and what it means for your trading strategy. Let me talk about this recency bias. Okay. Everybody's kind of caught in the idea that what happened last time is going to happen again. It's going to look exactly like the last few years. And while that is true in a way, people are focused on the wrong thing. They're focused on like this is going to do this because that. And so I need to look at that. What we want to look at here is in 2016 and 2017, we had the big bull run in Bitcoin, and then Ethereum came out. So you had this big alt market that was born in 2017, and it was crazy and it was wild. The same thing happened in 2021. We had this big bull run in crypto, alts came in, and then we had this DeFi and NFT thing. The older ICOs from 2017 eventually played the game, but DeFi led the way and NFTs led the way in the 2020-21 bull market. I've been in this game for whatever long to make calls and speculate and whatever. So what worked last time for me, I'm gonna stick to that so I don't go out on too far on a limb guessing what happened there. So what they do is they start looking at, okay, let's see what Solana did last time. Let's see what it's going to do this time. Let's see what Ethereum did this time. Let's see what Matic, these other things. And a little bit of the way they're kind of doing the same thing with like Sui right now, and some of those Aptos may be following Sui, which have had an incredible run just recently, and most likely probably are going to continue to do the run. But the thing is, like that big bloated market of everything else, this big vaporware market of promises and everything that we hope. Let's be real. There's very few products out there that are actually a real solution in crypto. Most of them are just solutions looking for a problem, or even like, let's even be more real. They are billion-dollar market cap token coins with a promise of a solution for a problem that they say is a problem. Like that's a lot of what's in crypto right now. Like there's some gaming things that are actually making revenue. There's some blockchains that are making revenue. There's some things that are doing it, but so much of this other stuff is just a hypothetical problem with a solution. And honestly, a huge amount of VC backing, hoping that they make it happen. Okay. And the VCs are happy to do that because they get this preferred liquidity on that in a market space that's already been proven to be huge with instant liquidity. And so these unlocks happen and they keep holding a lot of these projects down. So what's different about 2024, 2025 bull run is that for the first time since the 2016, 2017 bull run, there's an actual ETF that was approved. There's two of them. Well, there's Bitcoin and Ethereum, and there's 20 plus ETFs for the crypto space. That's one thing that's new. Okay, so the people who actually want access to the crypto markets but don't care about the vaporware, don't want to deal with wallets, don't want to deal with the scam, maybe even had wallets, had their stuff on their own device or something like that, are actually moving them to the ETFs for the security and safety, and outsourcing that to like BlackRock or Fidelity, as opposed to their own private keys or whatever. And this cycle is identical to the previous cycles in a separate way. So that's like the first way that makes it a little bit different. That's why it's behaving a little bit differently. but it's behaving identically in another way. The ICO market in 2017 was just pure chaos. People would throw out these big white papers and raise billions of dollars. That was it. You just had to write a white paper and figure out how to make a token, an ERC20 token. I don't even know if they had those then. But use the Ethereum network to create your own token. And that was the ICOs. There's a lot of those projects that are still in existence that billionaires were made, and they, exit scammed, moved to Puerto Rico et al., and came back and became, tried to re-legitimize their blockchain that they scammed everybody into turning them into a billionaire. And well, now they're philanthropists and they're able to fix that stuff. I can dig it, in the sense that they're coming back to be nice. In 2021, same sort of thing happened. It just so happened to be DeFi. Do you remember the DeFi summer, right? Or spring, summer? And you had the food DeFis, right? You had sushi and yam and pizza, and like, it was just these random names of food, and those were these protocols on the different DeFi networks. So that was the 2021 version of the 2017 ICO. So 2025 version of that is meme coins. Okay. The utility of, like I said, it's a promise looking for a solution, is what so much of the crypto market really is, if outside of, Bitcoin and a handful of actually productive products. And so what they've done is just said, well, we're just going to stop LARPing as world changing technology, and we're just going to be funny. Right. And so they create these meme coins, which take nothing to create. It's just come up with an idea that is a meme in society, or you think is going to be a meme, or you think could be a meme, or, could piss somebody off or make somebody smile or something like that. Get somebody behind it, create some art, or, have an LLM write your copy for you and create everything for you, launch it. If it works, great. You make a bunch of money. Same thing as if you did an ICO. Same things if you launched a DeFi protocol. The same thing if you created a special perpetual Ponzi scheme of DeFi, or a special JPEG. I mean, think about the JPEGs, right? So that's where we are right now. We've gotten to the point where we're no longer LARPing as big technology companies in a lot of ways. It's just meme trading. And the people who are doing it are people who didn't do 2016, 2017. They didn't get Bitcoin in 2012 or whatever it was. They didn't do DeFi summer, I think, in 2021. They're new to crypto, or they lost everything. Who knows? There's a lot of people that are doing it that way. And they're just saying, okay, just like everybody else, you get onboarded onto crypto where you got onboarded. And that place is memes right now. And try to convince me back in 2017 that ICOs was a bad game. I would be like, no, I'm buying it here and I'm selling it here. I'm quadrupling my money in a day. Like, try to convince me that that's a bad trade, right? I don't care. The underlying technology, blah, blah, blah. He's like, yeah, I know. I didn't read the white paper. I'm trading this thing. Same in 2021. So the same with meme coins. It just so happens that the real value that's happening in the meme world is that people are finding community. People are like believing in this weird space that they're in. So you have a classic market setup. You have a lot of incumbents, a lot of people who've been in the game that got lucky, that are trying to replicate that luck in the same way they did last time, but they don't realize that things have changed. And so they're playing that game. And so everybody's on that bus. waiting for it to take off, or that train. Okay. They've all agreed in that cohort, they've all agreed that Bitcoin, great, good. Yes, we probably should own some Bitcoin, but Bitcoin's done its thing. We're here for, Solana to turn into the next Bitcoin or whatever it is. And so they're sitting over there kind of idling, telling each other that Solana is going to be the best, or that Ethereum's not dead and it's going to live, and, all these other things. And it will have its day. But in the meantime, the people who identified it ahead of time, and were playing it in the meme coin space, have been really had the opportunity to be really successful, I should say. I can't say that anybody and everybody who trades memes is doing as good as everybody thinks that everybody's trading memes. I will say that most likely there's some money that has been made there. There's scams that have happened. There's just like everything else, just like it was in 2017, 2012, scams everywhere. They're all done. So as we get these advertisements of new cryptos coming out to create a Web3 infrastructure, you're competing against Bitcoin, you're competing against Ethereum, Solana, and all these other layer ones. You're competing against the layer twos that have been built on them, that some are quite successful. Okay. And then there's 10,000 that have not. So the infrastructure promise is fake. So at this point, we have pretty much, as of today, we have two areas that are the three, really, the most promising for crypto. The first, and I'm leaving Bitcoin on its own, okay, because it's always the most proven thing. It does not have to be proven to me and to, we can offload, we can outsource anything, any marketing and evangelizing we need to do of Bitcoin to Larry Fink and BlackRock and Fidelity and everybody else. They have way more credibility to your average investor, and a platform that is orders of magnitude times orders of magnitude larger than all of ours combined. I would say that there's three new areas that we can be looking at. So we could, the first one is memes. Anytime there is a sell-off, memes are leading. Anytime that there is a rally, memes are leading. Okay, that has happened since WIF pretty much, and Bonk came out a little bit less than a year ago. Okay, so we don't need to, believe it or not, that has been so validated that any convincing I do here is actually ridiculous, and you need to look into the mirror if you need more convincing. And so the next two, the first one I'm going to talk about is the most important technology that's taken over the world in the last 2 years, and that's AI. And the AI portion of crypto is actually really has the opportunity to actually be something real in crypto. So these these three things, I should say, are, in my mind, the three realest places. So real product, real problem, real solution involved. Now, I'm not saying that they're going to that everyone is doing it. And I'm not saying, hey, I'm going to go run off and put my investment here. But this has been in a relative strength environment. These other two sectors have currently quite a bit of strength. So AI, and I'll talk about where the technology could be quite successful. The technology could be quite successful in a way that you see these, when you go to an LLM and you ChatGPT or whatever, and you say, hey, make a recipe for, I don't know, whatever, apple pie. That gives you a recipe. That's used a token to do it. So it went out and that token was exchanged. You're $20 a month or not, you're free or whatever it is. Those things were passed. Okay. It goes out and it pays for compute time and processing and all inference and all these things to give you an answer of hundreds of billions of dollars have been spent so you can get really quickly a recipe for apple pie. And then you can, in the same time, you can say, teach me quadratic equations, teach me Maslow's hierarchy of needs. Let's build a proof for some physics thing. I don't know. Let's try to build a proof for the gosh, I can't even think of the name. The double slit experiment. I don't know. So some of it is like super simple. Some of it is a little bit more challenging. Like, let's create a trading algorithm that accesses this and then does that and scans this and does that and moves money from here and does that. Like, all of that is going to have, as we connect all these things, they're going to have these microtransactions. So currently, if you think about like, oh, I need to rent some computing time to do some work, I need to basically, you spin up an AWS or Google Cloud or Azure or whatever cloud provider or your own, you spin it up to do what it needs to be done. So maybe you build a server with Linux on it and you throw on a database, and you gotta run your backend, and then you want to render it into a web interface, and cool. Like, you kind of spin all that up to do what you need to do, and then you can spin it down, keep it running, all that sort of stuff. It's very similar. AI would be very similar in a lot of the processes that need to happen, that you could find a way to, like, if I could charge 0.0001 of a penny for 0.3 of a second of inference and 1/10 of a second of compute and render, and boom. But you do that 10,000 times a minute. That's something that a human would never be able to accomplish. That's something that regular code would not be able to accomplish, with variables constantly adapting and all these other things. So you can use these AI tools for machine learning. Okay, I don't want to get too far into the technology. I love that stuff, and I'll go. So it's very easy. So there is absolutely AI solutions that are coming online and are in the arena of participating in this AI boom. Not all of them. And that moves us back to the previous one. It is also a meme, an AI meme. So, if you're getting into the idea of a meme, now you understand, oh, this is an AI project that has a promise of something, but it's not there yet. So it's just a promise. So I'm either a venture investor, an angel investor here, or I'm investing in the meme with liquidity, meaning if you were to be an angel investor, you write a check for $50,000 to $10,000, whatever it is, to the founders, and then they go out and they do the stuff. And hopefully 10 years later, you turn that back into, $10 million, $1 million, or something like that. But you don't get, there's no liquidity from today till the end. Whereas with like this AI meme, you can get the venture investment type of opportunity with instant liquidity. So it's a different fundraising and a different environment. And then we have the gaming sector. So there's a new game right now on the AVAX network called Off the Grid. I've tinkered with it a little bit. I don't know why I couldn't remember the name. Off the Grid. It's the first crypto game that's actually taken off, and it's actually, a lot of people are non-crypto folks are actually really into it, but a lot of crypto folks, of course, are into it. So they're paying a bunch of influencers right now to play it and stream it and get a lot of action. So we'll see what comes of it. But that right there, either AVAX is a good, it's kind of the thing right now until this game gets their own token. But as far as, so we've got memes, we've got AI / memes, and then we've got game / memes. So for the most part, gaming is also heavily on that meme side. It's been the one sector within crypto that's, actually been quite a bit more able to deliver a product. Let me share my screen here. This has been a while that I've just kind of been running on here. on my idea, but we haven't gone to the charts yet. So let's go to the charts. So what I want to do is, first things first, this is a Bitcoin chart. And let's have a look. A year ago, the Bitcoin bull market began. We got long October, somewhere right in here, the end of October, right in here. Okay. October 20th, we got long. So it was about 28 to 30,000 on Bitcoin. We got long at Pollinate. And then, the Bitcoin ETF came out and, everything, that was over. The sell the news, we're all done. We got long again. We bought more here. Okay. Rally on up here. And then again, we bought the dip at 53,000 was me. Some people got it lower here, but we have been buying Bitcoin excellently. I got to say, we've got the best buys that have been available. We did not buy the absolute low. Okay. Here, we did not. Okay. And that's a key point I want to drive home about everything we're talking about here. It's all about momentum. Okay. I buy breakouts at the beginning. I buy dips after the momentum has been confirmed. Okay. I bought the breakout here. So this was the breakout, not the dip. Once that kicked off, this is momentum, folks. This is actually momentum. So you buy the dips. We traded around some of this stuff, and yes, we've bought some of those too, but the real big play was this one. And so for this entire bull market, we've had excellent timing on the big asset that we like to be in. We like to store capital. Let's take a look and let's just break down everything. So let's look at where we are. Are we still in the bull market? Are we in the bear market? So in the bottom, we have my SQN indicator. Again, you can get this in TradingView. You just search SQN. It should come up with my name, Christy, and then the fallible thing, which was a YouTube channel I was on when I first released it, and I didn't realize that was the name. Go get it. Here's how I'm using it. So Bitcoin trades 24/7, 365. Typically, I use the SQN indicator on equities or, the regular traditional market. So that has about 1,900 hours of trading per year. There's something like 8,700 hours in a full year. So the setting I use here is 461. I think, whatever, 450, 500. You're going to be in the ballpark, which is the whole purpose of this. So I use, looks like 461 on a daily for the SQN. If that's over your head, we'll cover it enough times in the future. So what I'm looking at is this bottom part, this histogram here, gives me an idea of where we are in a market cycle. Okay. When it gets in the blue, that's bull volatile. And that is where the opportunity of a major market top actually happens. Okay. As you can see, this went for a whole year before it was, the top was almost a full year. So 6 months at least from June 2016 to December 2017. So 18 months before the peak after entering into the bull volatile regime. And then it spent another, looks like 8 months before it actually broke out of that. So it's a slow indicator. And understand, this was 20,000 Bitcoin. By the time it actually broke through it, it was 6,000. So quite a dump. It's not great at timing the ups. It's great at timing the bottoms, actually. Not the exact day, but you can say, if you get into the reds down below, you can safely say that, hey, we're probably near a low. So this popped into it at 17,000. The low actually made it to 15,000, and it's been, up only ever since. So a $2,000 difference, 17 to 15,000 on that low from June to October. So, 4 months or so. So if you just use that as your bottom tool after a bull market, you can rest assured that you're going to be a lot smarter than a lot of folks here. Okay, so here's the thing. Now, if we go back to the 2020 bull market, that went from December to almost so 2 full years in that bull volatile regime before it eventually had its real peak. Almost 2 full years. Okay, so this time we went straight up into it really quickly. Okay, really quickly, and then kind of just drifted down. So what I want to point out here is that happened in 2016, 2017. That happened in 2016, 2017. In and out, in and out, in and out. And then we eventually just really took off. That didn't happen in 2021, 2020, 2021, 2022. It actually just went straight up in it. And so the whole period, you just kind of, there was no cooling off period. It just went straight up, down, up, and was done. Very, very aggressive and violent. This one is a lot closer to looking to the 2016 period. And I'm going to bring up my analog of the Bitcoin. Why is it not? Halving cycles. So the bull market starts right here at day 0. And me and Peter Brandt went back and forth on it, I think, on Twitter. It starts about on day 0. So the white line is this year. The yellow line is 2016. And so the halving happens right around in this same area, right around 150 to 200 days since the bull market began. And so the 2021 bull market had already, by the time we got to where we are today in post-halving, the peak had already been mostly the first peak. If we're using the analog from 2016, it just goes higher the entire way. And it's my hypothesis that we are closer to the 2016, 2017, because what this 2016, 2017 analog had was it was the first time that retail had an onboard into crypto through Coinbase, through other online exchanges that they could actually get. Prior to that, it was really, really hard. And it was a bull market and retail had access and it was a halving. Okay. The 2020, 2021 thing was a lot of money printing. And it was a wild time in our lifetime. And I think that's a little different. The capital that's in the market is not the same right now. The participants not the same. So what this means is as retail investors came online into crypto, this is what created that big, huge post-halving rally, and everybody just got on board with it. The ETF comes out, and then we have a halving, and it just kind of goes sideways. So post-halving, you have a lot of miners shifting. There's a lot of businesses that are changing. The supply of Bitcoin is getting limited, and now the demand for Bitcoin from these ETFs continues to grow. So this is a supply shock that everybody's talking about. Why is this important? Because how Bitcoin handles this environment, like, if Bitcoin dropped to 20,000, the crypto bull market would be over. We probably have meme coin mania still going on, just in a different way. But maybe not. So what we would be expecting here is in the next little bit, and I'm predicting that we are really close to that next little bit being right now, that we are going to start seeing this money printing coming out of China, the interest rates declining in markets across the world, which, happened in previous markets, that more liquidity in markets looks for hedges. Bigger money looks for hedges to protect their downside. It looks for speculation. When there's a lot of cash out there, you don't have to put your money in Apple or NVIDIA. NVIDIA is probably a bad example. You don't have to put your money there to make money. You can put it in a lot more speculative places, which we saw the small caps rallying. And that's, I think, what we got going with Bitcoin right now. It's going to, a lot of money is going to continue to flow into the ETFs, because if I'm a regular person and I've had my money, I've wanted to be in Bitcoin forever, but I just couldn't get it, pull the trigger on taking it over to Coinbase or wherever. Or I just didn't know, it just wasn't easy. I always forgot about it or something like that. The ETF is obviously the thing. And then there's, there's a lot of institutional money that won't buy crypto like a Bitcoin unless it's on a regulated exchange like it is now. So I think this is probably going to play out more like that. So we're a little bit like right around halfway to the, a little over another year of analog time for us to get to the end. So it's October 2025, somewhere over here. And then also just understand, when Bitcoin peaks, that's when the real speculation rolls into everything else. So what we've seen over the years was when Bitcoin peaked over here in December of 2017, Ethereum and then all the ICO crap really took off in 2018, the first month or two there before they crashed. So Bitcoin leads the rally and leads the crash. So let's take a look at the chart here. The thing I'm looking at here is we've lower highs, lower lows. The inflows on the ETF continue to rise. And even though, you can see this downward trend, we are still in the bull quiet. So we go from 26,000 to 75, so triple almost in a couple of months on Bitcoin, to new all-time highs, by the way, not insignificant, and then just hang out at all-time highs. You can say what you want about what you think about markets and your experience, but historically, if you've not got your parabolic move, if you've not done the big blow off top, and the fundamentals of the market and the economy are strong, then consolidating at all-time highs is actually one of the most bullish indicators you can get. Because if it wasn't bullish and the market was really in a recession, the economy was really heading into or in a recession, we were really out past our skis, all these things were all that. If we were really there, we would be down, and we're not. And I could show you how this looks, just like the S&P 500 peaked right here and then spent 2 years coming back to here, and then went sideways for a bit and it's taken off. Let's see if we can see an example here. That's Bitcoin. This is the peak, 2021, 2022. It spends, let's do 1 day so it doesn't look so dramatically different. Yeah. Okay. So same period as the Bitcoin period. It's just Bitcoin, where the S&P is at about 6,000 right now, which was the all-time high. So another 25% rally after it broke out from its all-time highs. It banged around sideways for a month. So, the equivalent would be approximately 4 months on Bitcoin, because it's 4 times as much time as that. So let's see, it started that in March. We are currently in October. It's overdue, man. It's gonna go, and let's just say 25% higher. So 25% would be like 16,000 above 77. So 90,000 is a reasonable speculation to where the next if we're analogging the S&P 500, that's about the distance that we would see. Now, I'm not calling 90,000 as the next peak on Bitcoin or anything like that. I think it's much higher. But I would say that once we break out, that's kind of our first landmark to say we are. Take a look at what the S&P and NASDAQ is doing and then see where we are. NASDAQ, on the other hand, by the way, has not even hit its new all-time high yet. So the speculative bubble that everybody's talking about, we're not even seeing NASDAQ at new all-time highs. We're not even seeing, crypto. Let's look at total 3. So, the alts still haven't even hit their all-time high from 2022. So the speculation is happening in very small cap memes. That's it. It's definitely not happening in Bitcoin. It's definitely not happening in alts. It's all happening in this small cap meme. Who's participating in that? There's not VCs participating in that. We're not talking $100 million hedge funds, $1 billion hedge funds are not participating in that. So my call, we are absolutely still in a bull market regime, bringing it back to the beginning, the silence of everybody who's not a hardcore, either systematic and it just kind of like goes like me, or is not a hardcore. Let's say if you're not systematic and your systems are saying go crypto, if you're just a regular retail participant or somebody who caught the last cycle or two and is just, alts, man, you're quiet. You're not responding to my text when I'm like, all right, man, this is it. You are this. I'll just say it. My Slack, the Slack group, the crypto folks in the Slack group, crickets. I'll post this video. So I did a handful of videos last week. I will probably get a quarter of the amount of views. I don't know why I'm doing it then, on this video, because I actually give a crap. This is what I'm doing. I'm going for where it's really, really at. So this will, unless I put a headline, I don't even know how to do a headline that would get people to look at this video. I'm calling it right now, though. This video, long video about crypto. If it's in a bull market, this is going to get 10 times the amount of views, likes, shares, upvotes, downvotes, whatever, comments. Right now, I'm going to send it out to my email list. I'm going to drop it in our Slack. I'm going to, throw it out there just like I do every other video I do. Nothing's going to change. I'm going to edit it. I'm, do all the things that you do to get people to watch it. Not going to happen. I can almost call it not. It's dead quiet out there. Nobody wants anything to do with crypto. They got caught they missed the move early. They caught some of the move maybe, and then they thought it was about to turn into the biggest move that they'd ever seen, the last leg of a bull market, and it just took a nap. And I think what that means, as they say, the train never leaves the station in the markets when everybody's on board. Because if everybody's in crypto, if everybody's in these positions, there's nobody else to buy. So by definition, everybody needs to be off. Just breaking hearts and souls, going from 70 to 50,000. That's 20,000 Bitcoin points. Bitcoin a year ago wasn't even $20,000. It's a fun freaking market if you understand market regimes and systems and whatever. Look, if you're watching it and you made it this far, you are serious about crypto. You are serious about trading real systems. You're not just a speculator. You're not just a moon boy trying to catch the next one. Like, you want to learn how to do this. You want to have a system that is predictable, in that you can predict there will be trades. So you may not be right on the trades, but you can predict when there will be trades. It's repeatable. So it doesn't just happen once a century. You can get hundreds and thousands of trades out of it. So you can get your statistics and say, okay, I know how much I'm going to get on average. I know what my losses will be. I know how long you'd start developing this knowledge base. It's predictable. It's repeatable. It is transferable. And that's what we do, is we transfer this system to somebody else to replicate, so that they can predict that there will be a trade. They can replicate that trade and then transfer that to, other markets. By the way, this system we run, I built this off of normal markets. I used hundreds of years of trend following data to help build and train this system and learn from. It just so happens that crypto is such an incredible market with so few major market participants to put a damper on the market, like happens in the S&P 500, like happens in equities, like happens in bonds and metals and all those other sectors where, there's sovereign wealth funds in it. This is just dudes metaphorically, like people, male, female, whatever, trading against each other. Yeah, there's some bigger money out there doing some stuff. Yeah, there's some VCs in here, but we're not talking about central banks. We're not talking about sovereign wealth. We're not talking about the biggest money in the world going out and trying to find a coin that misspelled a presidential candidate's name, for example. We're not talking about these big firms who are going out and finding the top performing AI sector or real world assets sector, getting in it, and then riding it, and then the next one, and the next one, and the next one, and the next one, and the next one. They're getting in and they're like, okay, we're in this and we got to stay in it now. We've got unlocks and all that stuff. We can get in and out. We're fast money. And, that's what the system's all about. This is the same system that I used I had a crypto hedge fund in 2017. This is the same system we used there. This is the same system that we use currently in the trading lab to trade equities algorithmically. This system has edge. This system has real world, and it can be transferred from crypto to equities, to futures, to meme coins, to whatever. As long as it has trend and momentum involved in it, that's what it's built for. So if you're interested, first of all, give it a like, do subscribe. PaulNateTrading.com/crypto. Check it out. Like, it's not cheap, and there's a reason. I'm trying to keep this from getting into too many hands because I don't want to lose our edge. We're in a market that does not have huge amount of, like, it's not the biggest out there. Okay. So I want serious people who can commit to our system, commit to our group, and who are looking to really do this. You get everything, by the way. You get the lab, you get all the other trading systems, Swing Beast, Curvy, lifetime access to the trading lab. It's all there if you get the crypto system. So PaulNateTrading.com/crypto. That would be all for today. What a wonderful session. This was a little bit longer than I had anticipated, but I had some thoughts that I had to get out, and I'm glad you allowed me to do it. I love you all.